Welcome to First Trade, the show where we're educating new investors and traders. We recognize that some of us are experienced traders,
and some of us aren't. That's why we wanted to level the playing field and make the markets accessible to everyone.
Thanks for tuning in, and we hope you enjoy the show.
What is going on, everyone? And welcome back to First Trade. You guys just saw producer Aaron Bree run through the background very excitedly. There he is again. First Trade, folks, if you do not know, First Trade is the show for the beginner trader. We're going to take you from just getting into the markets, like myself, where on the first episode, I literally made my first trade. And now we are a good amount of the way into this show. And we're always learning. We want to make sure you guys are learning, growing with us, if you're in our Discord community. But, folks, we have a pretty sweet episode for you today. I'm going to bring on my lovely, sometimes not so lovely co-host, Mr. Michael Murray. Mike, what is going on?
What's that supposed to mean? Why sometimes not? Am I just off some days?
Yes. So, Mike, I am just messing with you, maybe. Mike, how has life been? How has the markets been? Have you been making any trades? I know you haven't been in crypto, even though you've been hosting that crypto trading segment. What's up?
Yeah, it's been good. I haven't done any trades recently. I've got a couple of long-term holds. Actually, funny, similar to our guest who was on. We were chatting before we got started. But yeah, man, I haven't really done a whole lot. I've been working a ton, like enough to the point.
You're fired.
Yeah, okay, thank you for that. No, I've been doing a ton of stuff, you know, like I've been going like 16, 18 hours a day. Like I haven't had the time to, I don't want to get into it and like not put 100% into it. So I've just had my long-term stuff that I think is good, you know, over the next couple of months, and I just kind of let it sit there for now. So
there we go. All right, Mike, I don't want to take a whole bunch of time. This is only our third or fourth episode doing it live. We're getting better. We're trying. Comment section, how are you doing today? I have not seen some activity, so if you're watching, then say what's up. Franny, we got it. The boys are back. I don't have the song, but
was last week a good live episode, or was it a disaster? I can't remember.
It was a bit of both, but I think we're going to do better today. Internet is on our side. So, folks, we have a pretty interesting guest for you today. If you don't know what TrendSpider is, it is a platform, a pretty cool one at that, where it's basically like a software automated technical analysis program. It's designed to help traders reduce time that they spend, save time, reduce errors, and make better trades at the end of the day. And that is the name of the game. We have Mr. Jake Wujastyk, I hope I'm saying that right, from TrendSpider. Probably one of the coolest guys we have on Benzinga. He hosts a show from time to time. So if you've seen him before, well, you're about to see more of him. And you know what? Without further ado, let me bring on Jake.
Hey,
Jake,
thanks for having me.
Thanks for coming on. How's it going?
It's going great. You nailed the last name. So I don't know if you were practicing or what, but that was right on.
There we go.
I'm actually so glad you said it, because for a second I was like, am I going to have to introduce it? I've never heard it pronounced before. So I saw that and I was like, holy crap, how do you say that name? I was like, I'm going to mangle this. That was good.
You know what? I have my moments.
I've heard them all. I've heard every pronunciation in the book. So
I bet.
What's the worst one you've heard? What's like the most? I get them pretty often too. My name's Makhecha, so it's gone a lot of ways. What's yours?
I mean, way back in the day, in like elementary, middle school, I mean, I can't even remember how bad it was pronounced, because I don't even know where they got like those letters from. But a pretty typical one is Wujastyk. It's just 3 syllables, Wujastyk. So it's Polish, so definitely a little different than your typical last name. But once you kind of get the hang of the syllables, it's pretty easy to pronounce.
Awesome. We got Mighty Soldiers Trades. Andy in the chat. What's going on? How's everyone doing? Jake, for the members of the audience who don't know who you are, why don't you just give a quick little introduction and tell us a little bit about yourself?
Yep. So I am one of the founding team members at TrendSpider. I started my trading journey back when I was in late middle school, early high school. My dad one day said he wanted to open up an account for me. Back then, that was like Scott Trade. So I had like a Scott Trade account. And he just said, hey, I have to essentially be the main name under the account. I think it's custodial or custodian account, whatever word. I was under that. He gave me like $1,000. I blew up the account pretty quick.
Nice.
Probably within a year and a half. And the funny thing was, if I would have just held the stocks I bought, I would have done pretty well. It was really just not having any type of risk management, trading, technical analysis experience. I was just kind of looking at random charts and essentially, at this point in time, I was 13 or so, 12, whatever. Once I got into high school, one of my friends, his dad got into like this penny stock, and I'm like, oh, I can buy like 100,000 shares of this. It was like 0.001 pennies, and so that was kind of the death of that first account. But I really started to kind of trade more into high school when the financial crisis ended. And back then I didn't have a ton of money. I asked for a couple 100 shares of like XL Capital back when it was like $2.50 a share or something, and traded actually a family account too. So my mom gave me access to our IRA, and that's kind of how I had some success in high school trading the financial crisis. And then I went to college, traded a little bit in and out, definitely kept up with the markets, but studied economics. So kind of everything went into place, and I started understanding why prices move. Why does this happen? Why does that happen? There was kind of a reason behind it based on just simple supply and demand curves. So that's how I kind of got started in the markets. And then my first job was working at a biotech startup, and I quickly realized, the only language that I'm comfortable speaking is really the market. And so had a subscription service, and then one of my customers introduced me to our CEO, Dan, who was trying to kind of find a partner to start the company. And the rest is kind of history from there. And that was back in early 2018.
Awesome. And I know you touched on it a little bit. So 2 quick things. Obviously, I would love to hear a little bit more about TrendSpider, a quick intro there. And also a question that we have to ask every guest on the show is specifically if you remember anything about your first trade and how that went.
So we'll start with TrendSpider. TrendSpider is a technical analysis platform, but it's also becoming more of a fundamental and non-traditional technical platform. So this is for any type of trader, and I'm actually going to touch on a couple things, that we do have on the platform. If you are a brand new trader, that can really help you kind of train your eye when you're looking at technicals like candlestick patterns, trend lines, that type of thing. But as far as my first trade goes, I think it was Energen, EGN, back in like 2004 maybe. I was like 12 years old. I think I was like middle 8th grade or so, and I bought this company, Energen. If I would have held that, like I said, I pretty much just went all in this penny stock that was like 0.0001. And I see a lot of people do that when they first start trading. They're like, oh, I can make all this money because I have more shares. And it's like, well, 10% on $100 is the same as 10% on $100 stock or on a 0.001 stock. So, that was just kind of me trying to get as many shares as possible. But I think the first trade I made was Energen. It's no longer around. I think they got acquired. But, if I would have held that would have been a really good hold. But, I just kind of I don't know if my friend's dad was like telling his son to go tell everybody about this stock because he probably owned half the company because how small it was or something. But that's kind of what happened there. But I'd have to think about some other ones. I mean, they were DYNM or something was another one. It was an OTC. So back then I was kind of trading OTC stocks. You couldn't pay me to touch an OTC stock now. The spread is like massive, and it doesn't make sense. But that was the first stock. I think EGN was like a $38 stock or something back then. So quite a while ago. But yeah, no, I mean that was kind of how it started off. I think they were like an energy company or something.
Awesome. Okay, so to get kind of into the meat of this episode, what are we talking about today? Raindrop charts and volume by price and seasonality. Could you just start off by explaining what a raindrop chart is and how you might use that while trading?
Yep. So a raindrop chart is a volume weighted chart. So a lot of people who are trading, especially like daily candles, if you want to go at the end of the day and see where did most of that volume come in at what price level, you have to go from the daily candle to the 2 minute or the 3 minute candle or 5 minute candle, whatever low time frame candle you're using. And this allows you to see all of that volume throughout the day in one time frame, so on the daily chart. So what it does is it allows you to see the volume profile of the first and the second half of the day. You could even use this down to the 10-minute chart, maybe if you're more of a day trader or scalper. I personally, the lowest time frame I'm generally looking at is like the daily. So that's generally what I'm using. We're about to have monthly and weekly raindrops, so I'll definitely be using those. But they just allow you to see volume flow without having to go into that lower time frame. And so it really helps around support and resistance lines. It helps you see what's going on within a candlestick wick. So if you've got intraday price action that pushes the price up above resistance, then the price closes back down below that resistance line, you still want to know what happened within that wick. Was there any volume supporting price above that resistance line, whether that's a diagonal line, horizontal line, VWAP, whatever the case is. So that really gives you a better picture of what's going on. And then you can use this even for divergence. So for newer traders, divergence is just looking for a discrepancy between two things. So a lot of people look at, RSI divergence, higher highs on the price, lower highs on the RSI. They're diverging. There's a discrepancy there. With the raindrop, I like to look for discrepancies in color. So if you have, let's say, a red raindrop, which is showing that, sellers are kind of in control into the second half of the day, closing at a lower volume weighted average price. And then you look at the, let's say you look at the regular candle and it's a different color. That's a very powerful type of divergence. I use that all the time. So there's a lot of different ways to use them, but I'm generally looking at them around resistance, support, comparing them to the candle, looking at the wick, that type of thing.
Okay, awesome. And is this something you can screen share and like show?
Yeah. I didn't know if I could screen share or not. Yeah, I'd love to.
Yeah, that would be awesome. I think the audience would really benefit from that.
You're probably more technically advanced than I am. You could probably figure it out.
There we go. We got it on there.
Sweet. Yep. So kind of what I was talking about, these curved lines here. So your main raindrop range and the range of the raindrop and the range of a regular candle doesn't change. Your high is the same. Your low is the same. What's different is your open. Generally, if you're looking at a regular candle, you're open, or if you're looking at a price bar, your left bar here is your open. Your right bar is your close. The left bar on a raindrop is your volume weighted average price for the first half of whatever time frame you're looking at. Let's assume it's the day. So that would be the volume weighted average price for the first half of the day. The volume weighted average price for the second half of the day is this right-hand side bar. And then, as I mentioned, on top of that is the volume profile. So it kind of makes sense, right? If you have the volume profile here near the bottom of the range for the first half of the day, it makes sense that the volume weighted average price is going to be kind of right in the middle of that volume profile, because that's kind of the middle of the volume. Same thing here. You can see that this right bar is kind of in the middle at the peak of this volume profile, because that's the average volume weighted average price. So it really can give you a much better perspective on what's going on. So if you look at, let's say, something like Bitcoin, last week we had the huge flush on Bitcoin. And one thing that I found very interesting was the fact that on the 18th into the 19th, you had this wick here on the daily chart. I'll make this arrow a little bigger. You can see this was a pretty big, range here for the wick. So what you can see is, looking at the raindrop chart, remember the kind of the squiggly lines on each side are the volume profile. Well, here it's flat. There is no volume profile. So based on what the raindrop is showing, that move down was on relatively low volume. Now, that capitulation day on Bitcoin was on I think like 4.4 times the 50-day average volume. But relatively speaking, a majority of that volume took place at the top of the range. Not a lot of volume, relatively speaking, took place down here. So to me, that tells me this was a flush or likely a margin call event, which if you look at the news, a day later, there was a news article that said about 775,000 accounts got margin called. But remember, that the amount of capital in those accounts was like $6.8 billion. So it was likely very low capital accounts that were getting margin called that were just on leverage. And so that kind of waterfall of liquidations created a low volume flush. And that's how you can kind of visualize that. So when we had this candle and we didn't have a lot of volume here, I was pretty bullish on Bitcoin into the next day, just because, this wasn't on a lot of volume, relatively speaking, to where, majority of that volume profile was at the top of the range. So that's really something you can use on crypto. I mean, crypto is probably the best responsive asset class, if we want to call it that, for technical analysis. I mean, crypto respects supply and demand more than anything I've ever seen. Here's another example on Spotify back in the day before elections, where you have this diagonal resistance, and you can see here the arrow is just pointing to the same candle. So we've got, 1, 2 points. We extend it. Here's that third point poking out. So if we zoom in, this is kind of exactly what I was talking about before, where you've got a move above the resistance line intraday shown by the wick, but you still close below it. Now, this is kind of where that discrepancy comes in, right? Technically, this was a green day, but you have a red raindrop. So not only do you have, as you can see here, a lack of volume at the top of the range because there's no volume profile there, but you also have a red raindrop compared to a green candle. So that was kind of like a big red flag. I mean, you had two things there, the discrepancy between the colors as well as the lack of volume profile in that wick. Now, if you go to something like Lowe's, very similar time period last year, and this is kind of my go-to example just because it's almost the same exact example, just completely opposite, where you've got the same thing. You've got this diagonal resistance. You've got volume above, you've got the wick above resistance, but you have a close below. Now, you have a green candle and a green raindrop. That's a plus, right? You want to see the same color. On top of that, you see the exact opposite of what we just saw on Spotify, where you have all this volume at the top of the range. And then on the candle, you can see that volume is within this wick. So there's a fallacy in the market. And I was going to say, for someone who is new at trading, I would highly recommend we have a couple videos on supply and demand. There are so many, misunderstandings of why prices move, right? So like, for example, on this candle here, this was on October 7th, we have this wick that goes above resistance and we have this volume profile above resistance. To me, this tells me that there was very high conviction by buyers. I don't want to call this buying volume because that kind of insinuates a one-sided trade, right? Buying volume, there's still a seller that's selling that supply to the demand. So the way I look at this is I look at high conviction buyers, and then those buyers are willing to absorb any supply that's being dumped on the market. And that's why there's a volume profile here. If there weren't buyers to absorb that supply, then you wouldn't see a volume profile up there. The price would have to drop in order to find buyers. So what happens is you get these wicks that form, not because sellers came in into the end of the day. A lot of people look at these wicks and they're like, oh, well, sellers came in and pushed the price down into close. What's happening is that really aggressive buying is just done for the day, and supply and demand come back into equilibrium as the demand curve shifts back. The quantity demanded decreases because those aggressive buyers are done buying. That demand is kind of drying up. So it's not always, you don't always have a drop in price because sellers are coming in. You could simply just not have that aggressive buying coming in like you did earlier in the day. Same thing for drops in prices. You don't technically have to have an increase in sellers moves up in price. You don't actually have to have demand. You simply just have to have people stop selling, and then the price will continue up because you need to find sellers and the price needs to move up for that. So for newer traders, I would definitely recommend learning a little bit about the supply and demand curves. It will definitely help you understand how raindrops work a lot better as well, and how you can really use those to your advantage.
Sweet. Hey, you talk about seasonality a lot, and like I actually like I would love a breakdown of that for myself, just to know what that is. But I'm sure like a lot of newer traders could use that too. What's seasonality? Does that tie into raindrop charts? Like, what's the background of that?
Yep. So seasonality is important. A lot of people just look at one side of the of the trade, right? Technicals, fundamentals. You need to have everything in there. So one thing that I was really looking at back in March was the fact that, one, we were breaking out of this longer term resistance line. So this is the technical side of kind of the analysis, right? So this is the monthly chart. We finally poked our head above this resistance line. We closed above it. I can zoom in too so you guys can see a little better. So yeah, here's that close in March. And so, I was pretty bearish in March, like a lot of people were. And then I started looking at the seasonality. The seasonality is just the ability on TrendSpider to go in and see what is the win rate for a particular stock, or for, let's say, the VIX, over a specific amount of time. So what you can do is you can go to the sidebar. If you click show sidebar here, you can choose your time frame that you want to measure seasonality from. So you can measure day of the week. So in this case, on SPY, day of the week seasonality, and it says since 1-121. That means we're looking at how each day of the week has performed since the beginning of the year. So these different percentages are the win rate. So Wednesday, 62% win rate means that 62% of the time, Wednesday closes higher than Tuesday's close. So it's not telling you there's a 62% chance that Wednesday is going to be higher than Tuesday. It's telling you, historically speaking, 62% of the time, Wednesday closes higher than Tuesday. Now you can use this on different time frames. So for this example, going into April, I was looking at the seasonality on the month of the year side of things. So you can see here, monthly, week of the year, day of the week, hour of the day. So if you want to look at any of those time frames and look at the win rates, you can do that. So I went to the monthly, and I looked back since January of 2016. And why did I look back since January 2016? Well, the reason is one, if you guys are familiar with anchoring, or anyone's familiar with anchoring, generally you want to start a volume weighted average price, or volume by price, or really anything that you're measuring from a new status quo. So for example, it doesn't make a lot of sense to go look at seasonality since 2000, because we went through a lot of different cycles. We had the .com crash around 2000, 2001 into 2002 with September 11th. Then we had a little bit of a move up. Then we had the 2008 crash, and then we had the move up. So you're kind of like, you're looking at these different cycles. You want to look at pretty much since something happened. So in this case, I looked back since 2016, because the market was stuck for about 2 years back in 2014 to the beginning of 2016. This is when we finally put in a bottom on the S&P 500, and that's what marked the pivot point before we continued to hit new highs. You can't really go back and say, all right, well, what's the seasonality for May or April since COVID? There's only 1 year of data to go off of. It's going to be skewed data. You're not going to have enough data to go off of. So, 5 years to me is good enough, especially when you do have a status quo change in the market where you finally break out of that, pretty much that 1.5, 2 year range. So here, since looking back since 2016, not only did we have the long-term breakout, but going into April, you have a 100% win rate. So that means since 2016, April has closed higher than March every year since we started back in 2016. So it allows you to see, historically speaking, how are things doing. This is the same reason why I was bearish into Bitcoin into May. We had a couple different things here. We had divergence on the monthly, which I was showing here, but this is what we also had. So this is the weekly chart on Bitcoin. the measured move that I was looking at here for the fib levels was the 2019 high down to the 2020 lows. And what you had here for about 2 months is you had the 5.618 extension acting as crucial resistance. And, a lot of people are like, oh, fibs are voodoo, fibs don't work. Well, when you're at all-time highs, you really have nothing else to use. You don't have any previous prices to look at. You have to use 0.618 extensions, and a lot of people use that. That's why they work. They become self-fulfilling prophecies. So not only did we have 5.618 resistance for literally 2 months, but going back, and this is where I'm going to change the date, since the 2017 top, you can see May only has a 33% win rate. So you can see that, there's not as many years as we saw just in SPY. We're looking back 5 years. In this case, we're looking back 3. But you can see here that May, historically speaking, is the weakest month of the year out of the 5 months that we have so far in a year. So not only were we at resistance, but we were also going into a historically weak month of the year. And you'll see here, crypto is historically weak pretty much the rest of the summer. So that's why I'm like a little hesitant on crypto. I mean, if you look at some of these candles, it's really hard for me to see how anyone is like bullish other than some dead cat bounces right now. I mean, if you look at Litecoin here and we look at the monthly chart, that is a hideous candle. I mean, that is not a candle that I could pay myself to go long on. Now, if you look at the candle and then you look at the seasonality since the crypto top back in 2017, same thing. April, May, June, July, August, 33% win rate. August has a 0% win rate. This is not historically the strongest time for Litecoin. You can see that you have some slight upticks here in the end of the year, and you have a pretty strong start to the year for Litecoin. But the middle of the year into the summer months is just not a strong point for crypto. And Ethereum's the same way. I mean, Ethereum only has a 33% win rate across the board until August. So, and same thing, this is an ugly candle. And so, you're using a lot of different variables here. You're not just using technicals, you're using a mix of different things. Ethereum is one that, clearly we still have about, what's today, the 26th, like 4 or 5 days left in the month of the year, in the month. And I'm going to change this to 12 because I want to look back and look at the yearly RSI. The reason is 12 months is 1 year. So I'm essentially looking at the yearly RSI here. And you'll see here for Ethereum, I mean, you're kind of at a point that we have pulled back in the past. So, the monthly candle is not what I would call bullish at this point. I'm sure many would argue that, I don't know what I'm talking about, all that, which is fine. I don't have any crypto. I don't have any bias. I'm just looking at the chart and kind of basing it off that. And, some people would say, hey, well, the RSI was way up here in 2017 and it continued up. Well, yes, that is true. But you're having a big kind of change in heart on the fundamental side. You're seeing a lot of crypto regulations coming out. You're seeing China doing its weird crypto banning thing. So this is how I like to tie everything together. And seasonality is a big part of that whole process.
Awesome. Super helpful stuff here. Question. So is seasonality something that is mostly only available on TrendSpider?
So it's not available on a ton of other platforms. One thing that some platforms have, they do have like the month by month seasonality, but to be able to go in and look at like the hour of the day seasonality, looking at each hour and seeing, is there a particular hour of the day that trades better than a different hour? That's something that's really unique to us. Another thing that's really unique is the ability to look at the min max. So this is pretty cool. So if you go, I'll make this bigger here. So can you guys see this like blue cloud here?
Oh yeah.
So what this will tell you with the seasonality, which I've never seen on another platform, is the ability to see which months are most volatile based on the range. So for example, we're looking back on Ethereum over 3 years. This cloud will tell you, which month has the biggest range. So you can see here on August, this is a pretty tight cloud, right? It's not that wide. That's because the biggest move that's ever happened in one August over the last 3 years was 5.37%. The biggest move to the downside was negative 17%. But if you look at a month like October, over the last 3 years, there was one October where Litecoin went up 59.54% in a month. And then there was also a time in the last 3 years where Litecoin went down 43.31% a month. So this cloud will tell you, which months are kind of have the biggest range, have the most volatility. And then you can see, months like August and months like May, where the cloud gets less wide. Those are the months that have, a little more stable price action year over year.
That's super cool. Awesome. Thanks for coming on, Jake. Honestly, like, really cool stuff. A lot of stuff I haven't even heard about before, to be honest. And so I almost feel like I'm going to have to dig deeper into that. Maybe we'll have to have you on again. But we are unfortunately pretty low on time. So I want to be respectful to the next show, which is Pre-Market Prep at the close. Jake, again, thank you so much for coming on. If people are interested in TrendSpider, where can they find out more?
So you can just go to TrendSpider.com, and we actually have a Memorial Day sale going on right now, 45% off any plan. So if you go to TrendSpider.com, it will literally say right at the top. If we just go to TrendSpider.com, right at the top here, if you go to the pricing page, you got all the information right here. So you can choose from these different plans. You can choose from a monthly, yearly. If you want to look at the different pricing for monthly or yearly, just click this little button and it'll switch on and off. But yeah, huge sale going on right now. So this would definitely be the time to check it out. We also have a 7-day free trial, so you don't have to buy right away. You can try it out before you buy and see if it's something that would work for you.
Wait, did that other page say bring a tank to a knife fight?
I think that is one of our marketing. Yes.
That's awesome. I love that.
That is awesome.
That's cool. I dig it.
Yeah, this is the the main page, and then if you want to explore the platform or you want to explore the pricing, you just go to these different headings and just click on them, and you'll find everything you need.
Nice, man.
Awesome.
That's awesome.
All right, Jake. Well, thanks for coming on. I definitely learned quite a bit, and I think I have some more learning to do. Without further ado, I think that about does it for our show today. Was there anything that we missed that you wanted to cover?
I'll just quickly mention, if you are a newer trader, there are a lot of, because raindrops and some of this other stuff we talked about can be a little intimidating. We do have things like the pattern recognition, right? If you're a newer trader, the first thing that I would learn is what are different candlestick patterns. So you can go in and you can type in, let's say, an engulfing candle. And if you want to kind of train your eye to see what's an engulfing candle, you can use the pattern recognition to see, these different setups. So you can start realizing, oh, that's an engulfing candle, all these different candle patterns. And we have the auto trends. So the system will automatically draw trend lines for you. So you can kind of start training your eye on different setups. And then, all you have to do is double click, turn off trends, and you've got a clean chart. So a lot of different ways to use the platform.
Awesome. Yeah, no, I feel like, that would be super helpful, especially for people who haven't spent a lot of time looking at charts before and don't necessarily know what this stuff means. I know sometimes it's like really overwhelming for me. So seems like a really helpful tool. All right, Jake.
All types of traders.
There we go. What was that, Mike?
Oh, I just said love it, man. No, don't mind me. Just do your thing. Don't even mind me.
No, I mean, I love it too. And I think, folks, that does it for today's episode of First Trade. Thank you so much for joining. Jake, thank you so much for coming on. Mike, you're here. Anyway, we'll see you on the next episode of First Trade, which will be next week, Wednesday at 3 p.m. And without further ado, folks, I'm going to send you over to Pre-Market Prep at the close.
Thank you.
See ya.
Bye.
Welcome to First Trade, the show where we're educating new investors and traders. We recognize that some of us are experienced traders
and some of us aren't. That's why we wanted to level the playing field and make